preparing to live stream.
Oh man,
This meeting is being live streamed.
We live.
I don't have the Twitter on my phone, so I can't post to Twitter.
Guten Morgen.
I need to,
Guten
need
Morgen.
to figure that out. Guten Morgen.
Good morning, Vietnam. Good morning, Paris. Good morning, Phnom Penh.
Phnom Penh.
Good morning, San Diego.
Oh, good morning.
All right, let's do the Twitter. You're right, and I'll drop this in the
Guys,
Discord. If you're on the YouTube, welcome, welcome,
On Twitter,
welcome.
need to know.
We are doing this live every Friday, 9:30 a.m. Pacific Standard Time on the YouTubes. If you're listening to the recording, hello, greetings, happy Monday.
good morning in the live chat.
Yes.
Real quick,
Let me drop
I
this.
brought the wrong mug for today. I have a rocket ship mug today.
Yeah, turn it upside down.
Inverse. Inverse mug day. Sorry, guys.
Boom. I'm just dropping this in the Discord. All right, we're good. We're good.
Oh.
So, guys, we're getting really close to ETH Denver. I wanted to bring that back up. I think there's a lot of people out there making a little last-minute decision to jet in to Denver early March for the annual ETH Denver event. We will be there. We're hosting an event the first night of the event. We're going to be at a really cool Biergarten with games, and I'm going to beat Steven at Mario Kart in front of everybody for all the marbles again. This time with an audience. So yeah, should be great.
Wow, forgot about that.
Even steaming right now.
The audience already heard me offer you like 30 to 1 on Mario Kart 64, and you turned it down like a little girl. So I don't have anything.
I've turned nothing
I
down.
don't have anything else to say here.
I just don't believe in your bet offers anymore. You just rescind before you even have an opportunity to take it. So
Wait, when you guys
Rescind what?
played last time, did you do like a best of 3, or was this like a one?
No. It was
one
also
shot?
it was actually a best of 3 as well. So
Wow.
yeah, no, we did a full circuit, like best of points at the full circuit. You know, when you do like 4 races or whatever. Yeah, it was great. Let's move on to happier topics because I don't want Steven in this state of defeat from the memory of the Mario Kart
Wow.
loss to kick this off. So crypto is dumping. Are we jumping right into that?
Yeah, I want to jump in with some non-crypto stuff, get it out of the way.
Okay, we'll do that.
All right. By the way, the live chat's already saying that you look too rested, Armand, as a new father. So did you up the filter, or are you actually rested?
I'm rested. I actually let me share something really interesting. So for some reason 2 nights ago, I kept waking up throughout. I mean, not because of the baby. In addition to the baby, I kept waking up throughout the night because I was so hot. And I was like, what the fuck is going on? Like with my 8 sleep, it's just like broken tonight. And it was just like not regulated at all. And finally at like 4 a.m., I turn over, I look at my phone, and I'm like, oh shit, it's just off. Like it was just completely off. And then I woke up later in the morning and I realized to myself, like, holy shit, that's what a normal night of sleep used to be like. Just completely in torture throughout the night, either too hot or too cold or too something. And I forgot because the 8 sleep is so like adapted to my body at this point. It knows exactly what to do. I couldn't believe it. Anyway, I had to shout that out again because it's just like the most incredible thing. I'm like, that made me realize it accidentally being off made me realize it's worth 5 times as much to me that I thought it was worth. So yeah,
Got the wrong affiliate link in the description here.
dude. Why? We have that, don't we?
I'm just looking at there's like a DYDX link
Yeah.
Today's
in the
not
man
the
shilling
day.
mattresses over here.
It's somewhere in there.
Wants
It's
to
somewhere
be-
in there. No, for
wants to
real
be
though.
pump.
Like I absolutely love that thing. But you know, it's funny. I haven't responded to someone's question in the Discord about how I'm sleeping. Surprisingly okay. Like I've been through periods in my life where I've gotten less sleep, and I'm surprisingly okay. So I mean, it's not fun to wake up in the middle of the night because it's difficult to fall back asleep. For some people like me, some people can just not. My wife, like she's so lucky, she can knock right back out immediately. Like there's no sleep onset delay issues at all with her. So that's a problem for me. That's the hard part. But overall, like okay, I'm getting my 5.5, 6 hours. I would like 7, but I'm actually getting like 5.5 hours. So I'm very happy about that. Yeah.
Congratulations.
Yeah, we're happy
Dankeschön.
for you. We're happy that you're here because we wouldn't be able to do this without you for some reason. All right, I'm gonna get into some stuff, some non-crypto stuff. We get out of the way, but I did make some moves this week. I did shave off about 30%, about a third of the my like growth equity portfolio. JP Morgan, I pulled the ripcord and put it into cash. We've been talking about it. Just feel like we're pricing in soft landing, Goldilocks, and we may not necessarily get that. Doesn't seem like the highest probability option. So kind of did some de-risking, which I was excited to do. We could talk about how it was funny and how it took
Bank's
JP Morgan
holding
a week.
you. Your bank's holding you hostage, right?
It
Won't let
took
you
them a
sell.
week to execute all the trades. I had to like sign 7 DocuSigns, mandate changes, and retitling accounts. It was a fucking mess. But anyway, I guess that's what you get with white glove service. So that's done, and we'll see how things go. And if we're still pumping around mid the year, maybe I'll sell off another chunk to cash. And then or Eric, do you want to share? You kind of shave some stuff to cash. Do you want to share that while we?
Well,
on the
yeah, I
topic?
guess I did the same thing. I was sitting probably 40% cash in like most client accounts. I increased that to about 60%, and I was wondering what you're doing with the cash, because I pretty much dumped it all into short-term treasuries, like 3-month T-bills, which
What's
is
the
yielding
yield
like
on that right now?
4.5%.
Yeah. So I want that cash. Yeah. I mean, right now I have a money market fund it's in. It's getting like 4.1%.
That's pretty good.
Yeah. That's after JP Morgan takes their 43 bips of fees, which is just pure robbery.
That's robbery.
Yeah. But yeah, I may buy just some T-bills or even some CDs if I don't really need the cash. I haven't decided yet, but it's just sitting in that money market for now, earning some juicy negative real returns. No.
Love talking about bonds. My brokerage account is funny. It's like it's just like long 6-month treasuries, and then it's leveraged long the dollar on that. It's just like the super dollar portfolio. So I basically just
Wait, did you borrow against the bond value?
Yeah, I borrowed against the bond value to go like ultra short euro.
Ooh, you get a juicy like 90% release on the bonds. I like that.
Oh yeah, it's just pure cash. It's great. So I've just bifurcated my life. I have just like ultra long dollar, and then crypto is just super degen at the moment.
All right,
well, not really at the moment, but like it's probably going to get there.
Speaking about rates, I want to share just a few things. So last week, or actually it was this week, it was a few days ago. Let me know if you guys can see my screen, my little PowerPoint guy.
Oh yeah.
All right, cool. So I went to an annual investor conference for one of the real estate firms I invest with. Again, this is multifamily. I'm just investing as a limited partner. I'm not really managing anything, but they showed this really cool chart here. They called this a hairy chart. So basically what you're looking at is all these little hairs, these small gray hairs, are what the forward-looking interest rate predictions were at the time. And
Oh, I love this.
Yeah, so basically what this shows is if you look at the curve of the gray hairs and where they end, they never actually match the real interest rate, which is the blue line over time.
Every time except
I mean, quite a few
little
times.
variations.
I mean, like you're talking like 95% the market is wrong. And so this red dotted line is the current forward curve that we're going to spike up to 50%, and then we're going to get some cuts at the end of the year and some more cuts in December, in 24. But they kind of like started off just saying that the curves are typically quite wrong, almost materially wrong. And that's important for us just because, that's the benchmark we have to judge our risk assets and our ETH against. So wanted to show that. And then I just have 3 charts on some multifamily like fundamentals. So here's one. affordability. So if you notice, average rent to income ratio, this is the chart on the left-hand side, just spiked to 30%. So we were hovering, around like 25% ish, and now it's 30% of income. And for people who live in San Diego and most urban centers, like they've noticed that rents just kind of skyrocketed over the past 2 years. But then they compared it to the cost of ownership. And so you could see that big spike in the right chart, cost of ownership in terms of, this isn't rent to income ratio or cost to income ratio. This is just monthly payments, but monthly payments have shot up mostly due to interest rate spikes, but also home value spikes. And what this is all saying is, yes, rents have gone up, but hey, at the end of the day, renting is often more affordable for people, and quite a bit more affordable for people, given the rise in home ownership costs. That's one.
Look at the last time that the home ownership cost spiked way above rents. That was like prior to 2008.
Good call. You're right. Look at that.
What is inside of homeownership cost here? Just every fee and sort of maintenance, and are we talking acquisition costs as well? Or are we talking about like ongoing maintenance costs mostly?
No, this is not one of those fully comprehensive ones that we've looked at before. This is just like you're talking mortgage and property taxes. So,
okay. Mortgage.
Not everything's fully baked in, but this is a CBRE Freddie Mac. If you want to chart, if you want to go to the source and kind of dig into what it means. Moving on, just another one on operating fundamentals. And so I wanted to show these next two ones because this is kind of exactly how I was looking at how I'm going to be investing in multifamily over the next few years. So what we see on this chart is the percentage of rent growth on the left-hand side, and that's represented by this, looks like somewhat of a green line. That's the non-dotted line for Steven and anyone else who's colorblind. And then on the right-hand side, we have vacancy. And that's the dotted blue line. And then we see employment growth. And so the first thing that pops out to me in this is obviously rent growth kind of goes up and down with employment growth. So as that goes up, rent growth goes up. As employment growth goes down, which we expect it to going forward. So I'm expecting rent growth to kind of decline. It might even go negative. So I'm just planning out that my distributions that I'm getting might decline over the next year or two. And then what we also see is that vacancy is starting to tick up. And I've noticed that too in the quarterly reports I get, right around where the chart turns dark gray is where we are now. And you see vacancy ticking up, and they kind of project vacancies to tick up through 2024. So what that means to me, with vacancies going up, rents going down, that if you own existing properties, they're going to not perform as well. They're not going to grow. But if you're an investor looking for new properties, there's a ton of floating rate debt out there on these apartment complexes. And in late this year, early 2024, they're going to start to be distressed. And that might be a good time to start looking at, maybe some of these general partners can find some apartments that are under replacement cost. So I'm just stacking up some cash in the meantime, waiting for that time, end of this year, early next year, when some of those ones with floating rate debt are just getting the screws tightened on them. And it turns out I'm probably not the only one. Sorry for the weirdness on this chart, but basically what we're looking at here is that we have all-time highs on this left chart of dry powder. And this is multifamily dry powder. And in the bottom, you see like different types of strategies, but all to say is that everyone else is probably going to be looking for these deals as well. We see a ton of cash on the sidelines. And then on the right chart, we see a ton of, increased target allocations towards real estate and some of these larger money bags. So they're going to be there. They might not be there for long. And those were kind of the key takeaways I saw from this investor conference I went to. Obviously we talked a lot about historical returns and whatnot, and those had always been good. But when you look back at returns, the year before a recession, the year during recession, they're not great. So I think patience is going to be super rewarded here in the long run.
So
that concludes the
TLDR
mailbox
going to
money
be able to
corner.
buy real estate with a large bag of cash next year.
Yeah, I think that's the plan. You know, hopefully, I don't know. I mean, we've talked about this is like if I assume a 20% annual return in that asset class, but ETH's, kind of forward-looking annual return is 100% without the liquidity issues or the illiquidity issues, where should I put my money? I think I'm mostly going to put it in ETH, but peel off, save for a few, handful of deals. And if ETH appreciates over 2024, start to tranche out some of that money and put it into some more stable income producing. But who knows when the time comes? Could be full tilt at that time, thinking we're going to 20K. So we'll see.
Yeah. I mean, the ETH to real estate rotation could be like a good thing, right? Because ETH probably bottoms first if we have something that triggers this. So you get in there, you ride it up, and then rotate out into your sexy little single families there.
Multifamily. But you could, that would be the dream, to buy a home all cash from your ETH winnings. Don't have to worry about the interest rates. You come in a buyer with hard negotiating power, get a better deal. 2 years later, refi the money out. So that would be a dream. We'll see if we can pull even half of that off.
I love it.
All right.
Yeah, do you want to pivot to like macro stuff real quick? Do you have any thoughts this week from any of your readings or learnings?
No, I mean, I think the best case for what we're seeing is just that Goldilocks is priced in. The best argument for the left tail risk is that the Fed is watching the labor market, and the labor market's strong, so they're going to continue to over tighten, since we haven't even really felt the effect of all these interest rate hikes we've gone through over the past year. So they might continue to over tighten until middle next year. And then the right tail risk, for continuing into like a new bull market, just seems like, I don't know, China just overstimulates and just puts the world economy on their shoulders and takes us to Valhalla. So those were kind of the takeaways I saw from, the last month's macro data.
Have you seen this big flip hashtag gaining steam on Twitter?
What is that?
I'm gonna butcher it, but it's like, what's this guy's name? Carlo, I don't know, I forgot his name, but he's been popularizing it, like a macro guy. Sort of loosely saying that inflation is going to come roaring back and the economy is going to be strong, and basically we're going to pivot way back to hiking again, and then everything's going to completely go to hell.
Yeah, I mean,
that
guys
probably
see that?
that takes like years though, right, to play out. That's not like a 2023 narrative.
I think it is a 2023 narrative.
Man, if inflation comes back this year, everything is fucked.
We've talked about that as like a potential catalyst for just for nuking everything, right? Especially if China drives like very high energy prices, and like ultimately that could like break the economy, kind of in tandem with additional hikes, because because inflation starts ticking up again. That would kind of be like a double whammy that sends us all to Hades there.
Steven, are you in the tinfoil camp of that? Like China is intentionally trying to export inflation to the West and just make them go through their own double whammy? Or are you just saying it's a accidental byproduct of them just kicking their economy to start again?
I don't know. It's what I would do, but I don't know. I don't know if I buy into it entirely.
I don't think it matters, because if it's coming either way, who cares if they're orchestrating it or not? But I'm sort of in that tinfoil camp.
Yeah.
I think you have to kind of assume for at least one upsized surprise this year of inflation, right? I doubt we go the whole year where everything's just in line or below in line, unless you're in this like we're on the path to full deflation camp, which
I mean, we kind of are right
I've
now.
heard.
Well, full disinflation, I guess, technically at the moment, but
Yes.
it does seem like we are on that path, and it does seem like the liquidity situation is still good right now. Like maybe we had a little pullback in it, but it still seems like supportive of crypto, I think, in the short run, even though we've had a pretty nasty sell-off this week. Obviously, I haven't checked the price in a bit. What are we doing? Okay.
Okay. Don't lie. Don't lie.
A bit meaning like 5 minutes.
Yeah. Yeah, like 5 minutes. Yeah, we're down 15 low 1500s on it. We hit 1506 this morning, I think, for people listening to this on Monday, and we've had a pretty nasty sell-off. You know, we were kind of close to 1700, and we basically top ticked 1700 again, and then just kind of sold off from there. How are you guys feeling right now? Are you looking to buy, or are you feeling like we got more downside?
Well, I put back on some shorts. I'm back on my little short basket. ADA is included in that, but also like even shittier DeFi and metaverse type tokens, and I'm kind of playing the Chem timeline. Mid-Feb was always supposed to be bearish, and here we are.
And the Carl Icahn timeline, although his is very acute timeline. So for those who don't know, it looks like Carl Icahn put on $30 million of puts. He bought $30 million of puts. That he's basically betting that the S&P 500 will be below 4050. It's currently at like 4085 or 4075 by next Friday. And that's like the notional value of that, something like $4 or $5 billion. So it's a big boy bet over a very short time period. So he might be.
He could have even closed them. He could have closed them already. You know, they're probably already profitable. But
that's a good point.
It was a big bet in a short time.
Well, want to pop into the charts real quick
lines
here? Squiggly lines.
Steven, I'm just looking at this. You drew some lines on my ETH chart, like when you were at the office the other day, and they're just perfect. You really dialed in the like top right at 1700, and now we're below another line you drew, and it seems pretty critical moment. But looks like you have some similar lines drawn.
Yeah,
on
so
yours anyway.
In our end of year episode, I think I called 1700 as the top for 2023. And my logic was that at the time, I thought that we were going to have a little run to start the year. We had like the positive flows thing going on. We had like the reversal of year-end selling and some all this stuff, right? And I thought it was very ripe to kind of run this little circle area over here, which is, about 1678. And yeah, we poked up and hit about like 1712 or so on ETH, depending on which exchange you're looking at. So it'd be pretty sick, mostly bad sick. Like if that was actually the top, it was just a little fake out, higher high, and then we just kind of go back down all year. Definitely a possibility. But in our earlier streams, like we were talking about this little area here, like pre-FTX that we circled, where we kind of came up in like late October and did a little like zigzaggy thing, and basically peaked at 1680 and then dumped down. And I had drawn that on the right here because it was looking very similar. It looks like this fractal is like kind of on the verge of playing out. Like it's very possible we just get one last like puke here through the bottom of this range on ETH. And then I know on the last couple streams, like I still have it circled here, like all these lows. Like we've built up all this liquidity because we've kind of just rapidly moved through all these areas of price. And we've made like a low and a higher low and a higher low and a higher low and a higher low and another higher low, and then you can see how we get these candles that just come down and wipe everything out all in one shot, because we have traders like placing stop losses below all of these points, and when they never get tested, like to kind of accumulate more and more and more and more positioning there. So if you're a big player, you're kind of like in your bullish. You want to see like price kind of getting like absorbed in these areas. Like people are kind of passively placing like limit orders, like 1,500 or so, and basically absorbing all of that sell pressure. So if we see, and you can see we like didn't quite take the this last low here at like 1,500 basically on the nose, kind of front run that a little bit. So I'm really curious if we take this low. It's really scary for me putting a trade on here until we do that, right? Because I feel like if we do take that 1,500 low, we've got a lot of like it. It's not a given that we're just going to pop back up there. We could just dump all the way down to this kind of like 1420-ish zone that I drew a while back anyway. That would be like kind of like a real
So are you
spot.
saying, just to kind of summarize that, like basically if we drop below this $1,500 level, it's a higher risk return to short that down to say 1420 if it breaks below that level than it is right now?
Like buying here is a little scary. Like we are at support, but if we lose the support, I think we can go way, way, way down. A great setup, I think, if you are trying to position, would be like a move kind of down from here past those lows, and then kind of like build up some shorts, and then we actually just reverse and get back in the range here. This would be like a great setup. So run 15, fake down, and then kind of get back inside 15. The reason this is nice is because you now have like a little invalidation here. Like you can place a trade and kind of like limit your risk. Like if we get back below that, you can be like, okay, well, we're probably actually going to go down to the 1400s now, right? So this is like an example of waiting for price to kind of tell you something and then taking a position. Like I don't think this is super actionable right here. Like I might buy like a little bit of spot here. Like I still do buy some spot in the event that like my 2023 thesis is wrong and we just bottomed and we go up. It's possible. And I think like, buying 1,500 spot after like a huge dump like this is never going to be like a horrible thing to do in the long run if you're just kind of nibbling. But for like a big trade, I want to see like a run of all the lows, kind of get back inside this range, and then maybe kind of long around here, and then target. I think that if we go back up, we want to target first, like basically like 1,800 or so, and then I think this is like a real good target up here around like 2K, because I've mentioned this before. I do think there's a good chance that we just get like a year-long like kind of accumulation range where like maybe this is our range high around like 2,000, and then I don't know, maybe we don't go all the way back to the lows. Like maybe we establish a new range kind of like over here at a little below 1,200. But this would be your game plan if you think like what we're saying about macro is correct. Maybe we kind of run up after this, we tag either these highs or maybe all the way up in this range, but then we could kind of go all the way back down here in the summer to kind of like the 1200s regions. Maybe we bounce up and down and then kind of go back up in 2024. That's something I'm thinking about, big picture.
Steven, are you thinking that summer time range, because of the net liquidity dynamics that we've talked about before, like basically the treasury is just like pumping money into the economy because they need to spend all the money in their bank account while they can't raise more debt? And then once the debt ceiling negotiations go through, like let's say June, July, they finally reach an agreement, the treasury can fill their bank account again with more debt and suck liquidity out of the economy probably fairly quickly. Is that why, or is there another reason why summer looks?
It's a lot of stuff. Like we have the expression sell in May and go away, and that sort of seasonal trade has been like pretty good for a long time. Like I marked May here, right? So you can kind of see how it would set up nicely to be a point in time where we can kind of come back up and run this and then kind of die at some point around May. So I think like holding crypto in the summer for whatever reason has been historically bad. it lines up very nicely with like the liquidity dynamics and TradFi that I think that you set forth there. Also, I just think we're sort of on borrowed time anyway, generally speaking. The other thing is I think we could have some like narrative exhaustion at this point. Like this could coincide with like Shanghai fork where everybody's like, oh my God, there's no more bad. Now we're gonna moon. ETH's going to go up only now because everybody's going to not be afraid of staking, and it's going to be the great lockening, and price is going to moon. And then also like Blur NFT airdrop is expected to kind of ignite like a big boom in NFTs, and maybe it will. But that could be like an example of a situation where you get this kind of like peak euphoria in these like narratives, and then what narrative comes next to sustain that? I don't know. And then if the market is just sort of exhausted there, it's exhausted at the top of like a critical range. It's just looking for any reason to kind of like capitulate. Like in the recent days, right? Like we had this kind of little distribution top, I guess, up here on ETH up around 1700. And then when Gary kind of did his thing and came in, like we just absolutely just turbo nuked like very quickly because like it, price was sort of exhausted, and then a little catalyst kind of sends you down. So that's just kind of like high level how I'm looking at it, and I like to look like 2 or 3 months in advance. I think it's really hard to do anything beyond that actually, but that's kind of the outlook I'm looking for.
So does this chart help inform your positioning on alts? Because we saw ETH rally maybe like 25% over the last month or so, but then like alts have gone up between 50 and 300% in that same time frame.
Yeah.
So like if this is I don't know if this could be bearish for ETH going forward. Would you expect alts to sort of mean revert back down?
So my game plan is to mostly play this through alts. I actually think the timing is kind of rough here for ETH. I think it's underperformed, right? I think there's these headwinds of Shanghai looming over it, right? And I'm not necessarily looking to acquire a bunch more like spot ETH. Like I said, I'm mostly looking for a place to get into perps trades where I can kind of hold, or kind of go in and out for like a 1 to 2 month horizon and just be really nimble and able to just rapidly go into cash. But I have my eye on a lot of stuff, right? Like I think if you missed DYDX, for example, like we're getting a pretty good retest of this ginormous like accumulation range we were in right here, right? So
you're talking about $2.75 ish.
Yeah, depending on how you want to draw like the magic lines, right? And this is more of an art than science, right? But you could kind of see like a breakdown into this zone here, retest, come up, deviate down, come up, down, and then we break above it. Now, maybe we're retesting this sort of like nether region here between like 230 and like 272. And one thing I like to trade is like these like areas of consolidation, right? So here you had the breakout, or we're into this zone right here around, where are we, like 2.32. And you can see here in the chart that we have this little 12-hour down move here. We have this like down candle from like 250 to 234. This is a place where I really want to buy, because if you're trading DYDX on the thesis that we just broke out of this gigantic consolidation range here, and we may be like if you zoom out on this chart, it looks pretty good, right? It looks like at a bare min you want to target this high at $4, but maybe we come all the way up here to like $7. That's a huge trade, So if you go long here, you can capture like a 200% gain. And then it's like, where are you wrong on the trade? Well, you're probably wrong on the trade if this zone here that I've marked out on the chart, like if this doesn't hold out as support, like if there's no more demand for price here, it's very likely we break back into this range and maybe just go back into reaccumulation again, right? So I like this because you can make like a very concentrated bet with like very limited downside, where you're very obviously, you know that you're wrong and there's not a lot of questions about it. It is very possible that this move here was actually just like, this is just a big deviation, right? And if that ends up being the case, you could actually flip flop on this, right? You could go from long to being short and just be like, actually, though, this is just a fail over here, and maybe we trade this all the way back down to the bottom of the range to $1, and you can still capture like a 52% move, right? So really cool setup there. Curve looks pretty good to me as well. I've got my eye on Curve again. Like I'm watching this kind of little zone here, this up move before we broke a bunch of market structure. So reclaiming this area gives you, a pathway to come up here and trade Curve from 95 cents at least up to, I think this looks like a good target here at like $1, $1.60. This is a big move. This is like a 68% move there, and I'm looking to get long in this sort of like 96-cent area here. And like what I really want to see is I want to see these lows kind of get taken out, and then price kind of get back inside here. And then again, I might make a similar trade where I maybe go long around like 96 cents, and I just quickly get the fuck out, like if price kind of goes back down here to 93 or something. It's a really tight level. So I think a lot of alts are giving you setups like this, where if you think the bull market is continuing, you can kind of get back into them.
We got a request. Any thoughts on the DXY and MATIC in particular?
So
then I would love if at some point you and Eric can maybe describe this blur airdrop to Armand and I, because
yeah,
we want to ask you about it.
Sounds pretty juicy.
So I've been long the dollar. I took some profits when we hit I've been long the dollar since about like a very bottom of this range, like 101.6. We're at like 103.6 now. Pretty big move when you're talking about currency. So I took profits when we hit this little range of consolidation here, and then when we kind of lost it and it kind of got back inside, I added a little bit at like a 103.1. And if we take this high here at 103.9, right, and kind of get back above, like I'm probably going to actually add to this position again, and I'm going to basically play a why am I so bad at drawing on this thing? Yeah, like I'm going to basically play like a move up to like these highs here at like $1.05. I think is kind of an interesting target. And this again is just like a really nice risk reward. So I would probably, have my stop, like if we go back in the zone here, and it's like another 3-to-1 risk reward. So I'm just kind of compounding this dollar trade. And it's also like a nice hedge against like the bulk of my portfolio, which is still actually like long crypto. And I think there's a lot of risk in being long crypto. I'm trying to avoid that particular disaster from happening. What was the other thing somebody brought up?
MATIC was the other request.
MATIC. Yeah, so I shorted MATIC. I don't have the position open anymore, but I was, again, this is a little zone of supply before we made like a huge move down. So this was like kind of earlier, like last year, between like $1.26 to $1.37 or so, that particular zone. You can see that in November we came up and tagged that right before FTX, before dumping off, right? So you're expecting price to kind of fail here again until proven otherwise. And the trade I took was when we kind of ran this high here at $1.30 or so, kind of got back inside of it. I started scaling into a trade, and basically on another chart I had some magical lines drawn here as like a trend line. Basically traded it all the way down to 123. I actually really liked the trade I made and got out, and I might consider getting back in again here, because it still looks to me like we are kind of running into, you can see the magic line is just this is the prior high, and again it looks like we're failing off of it. So I might re-enter a short here and just place a stop there, and if crypto looks like it's nuking to me, like this might be something I would play, because I think you could run this all the way back down to these. There's a lot of like, I think lows here at like $1.07. And this could be like a huge trade. And then I think also if you get $1.05 on MATIC and you're a bull, well, this to me is like a really good region to actually flip into a long position, because this is just like this is the top of that prior range. So you might expect this range to hold at around like $1.05 and then trade this back up potentially. So that's how I'm looking at that. What's another play I'm looking at? I really want to get long on Looks, because I think it's going to be a really huge potential for like an NFT kind of narrative trade. And we've had a pretty sharp sell-off from the peak from like $1 or from 40 cents or so that we got to. I really want to target this range here, like from like basically around like 22 cents. Like if I can get price coming in here, like I am really happy to, like if we come in here and then kind of reclaim this magic rectangle, I think that's just like such a good setup, because again, like you have like a really good idea of when you're wrong on the trade. I don't know why my thing is doing that. Anyway, whatever.
When's the Blur airdrop supposed to happen? Because that could bring a little more enthusiasm back into like an NFT token trade.
Blur is something I'm watching right now. Like I want to farm Blur. Blur for people who don't know is just like,
start with basics for me, because I haven't followed this at all.
It's a pretty sexy new format on an NFT exchange that like tries to like have like this really fast trading experience and really like encourage liquidity. Let's get this kind of like bidding system that is more analogous to how like a traditional order book operates with other coins. People should check it out if they want to look at it. Blur.io, learn how it works and everything. But there's a second round of airdrop farming going on right now. I think the qualification ends on February 14th. So you still have 4 days to farm this thing. There's
What do we do to farm? Just buy and sell, essentially?
A lot of it happens via bidding on stuff. For example, if you bid on a Pudgy Penguin and you're the top bidder at $4.97, so the higher you bid and the longer your bids sit there, it's like a really complicated point system where you're getting points like depending on like a whole bunch of factors. There's a decent write-up on it at boxmining.com where it kind of goes over the airdrop guide and how it works, right? Like, see, there's some stuff here. I won't like super bore everybody with it, but you can see within a collection, the highest risk bids earn the majority of the points. For example, if the floor price of NFT is 101 and there are 100 bids at 1, while your bid is 99, you would not earn as many points, right? So if you're the bid that's kind of closest to it, you're racking up the points. So it's encouraging people to basically bid as close to the true value of the thing as possible and not just throw like the LooksRare airdrop, I think, was way less sophisticated. Like people were just gaming the shit out of the system.
So they were all, like in the LooksRare airdrop, everyone was trading the NFT projects that don't have royalty fees associated with it.
Right.
Does Blur? Does that have anything to do with what Blur's doing? Like, are people trading Meebits because there's no royalty?
The most popular collections, I think, are right now Other Deeds, Mutant Ape Yacht Club, Pudgy Penguins, Doodles. So no, actually. And I'm not sure how much of the airdrop is kind of like revolving around like buying stuff. Like I know there's stuff about listing, and a lot of it is revolving
just
around
activity,
bidding,
as you
yeah,
said,
just
right?
like the being like
Can
the
you-
liquidity side.
Can you drop that link in the Zoom, and I'm going to drop it? Like all the NFT degens in the Discord are going to love this.
Yeah, I feel like anybody who's into NFTs right now should
What's
just
the-
be dedicating the next 4
Yeah.
days of their life, if you haven't
Yeah,
done
what's
it
the
already, to
window?
just farming
It's-
this thing.
It's the next four.
February 14th, I think it ends.
Damn.
So yeah, I will.
Damn, I don't know how I'm going to make
Steven,
time for
just a
that.
reminder,
I have
February
to.
14th is also Valentine's Day.
And I will
Can you
be.
imagine?
I will be
Like, all
farming my free tokens right up
all
until.
all the true degens out there are just like not going to make it. just literally like babe, like I don't know what to tell you. Like, like it's just not happening today.
Yeah, I don't know what the I don't know what the cutoff time is, but it might be an expensive dinner for some people. Like making $100 an hour farming the airdrop, and then they gotta go to dinner and spend $300. That's a big swing. So I feel for people.
The airdrop is more tokens. So does Blur trade already, or no?
That's a good question. I don't know if the token is circulating yet, to be honest. I have to look into that. But
I tried to look it up.
And why did you bring this one up in particular? Is it because it's NFT related and that's something new and interesting, or do you think it's actually going to be like a significant?
I think it's going to be a huge airdrop. I think it's going to be one of the biggest airdrops we've seen, probably, and we haven't seen a really big one in a while like this. So it's going to likely be like a stimulus check. It's like a stimmy check to the NFT ecosystem. You just airdrop $1 billion of value into a bunch of degens, and then maybe they go buy NFTs with it and everything. That's the hopium that you have here. And then obviously all this activity burns ETH, and ETH price go up because of that. So I definitely see the position. I that's why I love this dip right now. Like I don't think it's over. I think this is sort of like a gift from the gods to allow people to reposition into a lot of stuff that they may have missed out on. I mean, we've been preaching people to not FOMO, but now if you didn't FOMO, you have some good entries on stuff. And I think another thing you have a good entry on right now is like if you think the Arbitrum token is going to pop off in the next month or two, like I've been saying this, but like I think Arbitrum ecosystem plays are probably still going to like just absolutely moon if that happens. Like I like the DYDX chart and the rebate DYDX, the other token. Those both look really good to me. I mean, GMX looks pretty good to me. GMX is probably like your biggest play you can make as far as getting exposure to like Arbitrum, right? That is like the Arbitrum protocol, but I'm sure there's some little gems there that if you go gem hunting, people aren't talking about yet, and you can find like a 2-3 million market cap coin that could give you like a 5x or something if this kind of narrative plays out. So I think this is the time to really put on your grind pants and get to work if you if you think that this thesis is going to play out. We don't get opportunities like this very often, and it may pass very quickly because we may go back into the mini bear again.
I'm pretty bearish coins in general, and I haven't looked at NFTs in ages, but it seems like it'd be a worthwhile exercise to go bid on. Like I probably want some dick butts or something, and this would be a good time to go make some bids, get some free Blur out of it.
Yeah. I mean, I feel like bidding on stuff that you might not care about buying anyway is fine. But people are like getting inventory and then selling it, and I think you get points for that. I hope. But obviously, if you're doing that, you might be eating like slippage, and I don't know if royalties are enforced on Blur. I don't think they are. So it might be possible that you can kind of go in and out of these things and not pay a royalty fee, even, in which case like your risk is minimized. But if you're going in and you're buying and selling a collection accidentally and paying like a 7% royalty plus like exchange fee every time, I don't know how many tokens you're gonna farm to make up for that.
Yeah, and Zach in the live chat confirmed there's no Blur token trading yet, so
yeah,
could certainly be who knows what the price will come in at and what the market cap will come in at.
Yeah, and I'm sure that'll be a really interesting trading opportunity for traders out there. Like I imagine that will be listed on major exchanges, and I imagine there will be some crazy volatility in that. Like we saw with the ape token when that came out, there were some big swings to trade up and down in that thing. So definitely something I'm going to look at trading, and hopefully the market supports that.
Yeah, I kind of like your LooksRare thesis based on this. I could see like a narrative shifting to more of these like NFT type tokens.
Yeah, like right now it doesn't look like it wants to give me that entry, and that would be frustrated. And maybe you could make an argument for buying a little bit up here anyway, because I think you can draw some little lines here that look supportive. But this is really the zone. I'm interested in that bad boy. And yeah, I think the other thing we saw this huge pump this week in the liquid staking derivatives. Were you guys following that?
Oh yeah, I mean, obviously all the regulatory stuff against staking, particularly with Kraken, is giving a lot of strength to LDO. I think our Rocket Pool had the biggest
Rocket
move, it
Pool
looked like.
2x since we did our little episode on it, minimum 2x.
Yeah, Rocket Pool has been killer, but like it's interesting. Like all of these tokens, like Frax Share, for example, like Frax Share is like kind of one of the underrated LSD tokens because people don't know a lot about Frax ETH, but I think it actually has the highest yield on your ETH if you're just a yield maximalist. But this thing pumped yesterday like super hard. We pumped like 42% basically in like a second, and then we came all the way back down from the peak. We're already down 24% from the peak, right? But you could make an argument for accumulating Frax Share in this little range up here. If you get around like $10 or so. I still think this, like, ideally I would love like a wipeout to take us to like $8 on this and kind of do one of these. There's a lot of alts that have the same setup that we saw on DYDX, where you've got this kind of accumulation range we broke out of, and we might get a retest of it. And again, like I think this is just like, it's just a gift. It's a gift if you're bullish and you can get this in the pullback, because this token could easily trade all the way back up here. That's a 168% move if Frax Share goes back to retest and it comes to $21, and who doesn't like moves like that?
I guess my question would be, if you want to trade this stuff, like any of these LSD tokens, are there perps for these, or are you buying them just like on Uniswap?
It depends where you trade. Like I have some exchange accounts where I keep small balances on and do some perps trades. Frax Share is like a decent one to just spot buy. I think you can make an argument for having, Frax as like a part of your longer term DeFi portfolio. It is an interesting project, I think. So I wouldn't mind buying spot for this, and that's how I would be looking to play this particular trade. But like DYDX, I think I'd rather just do a perp. I'm still not sold on the exchange. I had a very bad experience on there yesterday, actually, where I got liquidated on like the dumbest wick you've ever seen. Like there was like a technical glitch, and like the pricing, like the books just thinned out, and price on MATIC ticked from like $1.23 to like $1.35 in like
Whoa.
one wick. And there wasn't a ton of volume up there, so it didn't like completely wipe my account, but it took out like 20% of my position for no reason at this like egregious price. And
Why is that happening? Is that just lower liquidity overall, or is it just specifically on DYDX? The liquidity is just
the liquidity is nowhere near like what it is on something like Binance, so that's a problem. And then liquidity dries up in these like super volatile times, and then you get like sort of like a technical glitch on top of it, and then like everybody pulls all of the liquidity, and then you can get these like crazy moves up and down as price just kind of goes through zones and nobody's there to kind of absorb it. So yeah, it is a work in progress, unfortunately, but such is the life with new tech.
Well, DYDX, the token, is available to trade. You can trade the perps on Quenta, and I think that Quenta is launching like a new perp exchange or something, a V3 or something.
Yeah, there is some decent liquidity for DYDX spot on Ethereum. Like I think there's like $3 or $4 million of liquidity. So as long as you're not trying to do 6-figure market buys on it, like you can still accumulate the token. And I again, like I don't know if I'm holding it forever. I think there's a lot of execution risk in what they're doing, but the setup just to play the year or 6 month or whatever, how long it is, kind of swing trade app chain narrative, vesting change, I think is good. So definitely looking to buy that guy. Do you guys want to talk about the stablecoin stuff a little bit and wrap it there?
Yeah, let's wrap up
Yeah.
soon. So if you got something you want to cover real quick, let's do it.
So, yeah, I mean, I've been expressing skepticism about this bull run and like why I don't think it's like the start of a new paradigm, and why it's more of a, you know, like an echo bubble, to borrow a term that's been going around on crypto Twitter a lot. I made a tweet yesterday about the concept of PvP mode versus PvE mode, which are these concepts we borrow from gaming. You know, PvP, player versus player, right? As a casual investor, you want to be maximizing the amount of like time you are spending investing sort of right before and while we go into PvE mode, and then to minimize the amount of investing you're doing in PvP mode, right? Because in a PvP mode, we have the same fixed amount of money in the crypto ecosystem, and it's just rotating and it's changing hands, right? But there's no like wave of new capital everybody is riding together. It's similar to how in TradFi we have like the tailwinds of the Fed balance sheet, of liquidity being injected into the system, and how it makes all of the asset prices move higher in tandem. Well, the equivalent to that in crypto is the stablecoin market supply. And this is a chart that people kind of pull up and talk about a lot. So this chart on the screen here is basically the total market cap of USDC, DAI, BUSD, USDT, so all of the major stablecoins. And for those people not watching this, I mean, this chart is just up only from like basically end of November to the beginning of 2022, just absolute moon status, right? And since like February or so of 2022, it has basically just been, you know, down only. You know, we've gone sideways, but it's like interesting. There's no upticks really. It was just sideways and down and down and down and down. And in November, we kind of had like the final capitulation with FTX, and we saw a little uptick in stablecoin market cap in December. But what's interesting is that you would think that this year, with all the activity going on, that we'd be up, but we're actually down. Like we are down about 2% since the influx at the end of 2023, and that's bad because it means that we are sort of trading the same money back and forth to each other, right? So I don't think you can really be bullish until this number starts ticking back up again, this like total stablecoin market cap number.
Yeah, but the crypto market cap in 2023 has appreciated by like 20% or so. I guess I can't see a scenario in which this thing just goes sideways and crypto market cap continues going higher.
Correct. And what I like to look at that I think is like real good alpha is not necessarily just the total stablecoin market cap, but the ratio of non-stablecoin market cap to stablecoin market cap. Like the theory being that if you have a sort of fixed amount of stablecoins in the system, there is only so much non-stable market cap that amount can sustain. So you might get like a sort of oscillating ratio up and down if you plot that, and that might be an indicator. And that is the case actually if you look at this. So this chart on the screen is basically a chart of this doesn't have BUSD in it. You can argue for putting BUSD in it and getting some different results now, but like the data on it didn't go as far back, so I kind of left it out for the moment. But this is basically USDC and USDT market cap as a percentage of total crypto market cap, with those sort of left out there. And you can see that this has been like a pretty good indicator of prior crypto prices. So if I throw like the Bitcoin price on here and move this up, you can kind of see in the chart local bottoms in this ratio, they have corresponded to local
Tops in the Bitcoin price. Yeah.
in the price of Bitcoin, right? And again, this is a and it's just really, but not only does it correlate with the tops, like the bottoms are really good too. Like it seems like on this particular drawing we have here that this like 78 is basically like sort of the top, but we have these like like the June capitulation was the highest reading we ever had on this, like leading into it, right?
Right, and that was just driven by crypto prices getting destroyed.
Yeah, and then you can see FTX here basically hit like basically the other kind of oversold reading on this indicator, right? So as a general guiding principle with this sort of indicator here, like whenever we hit like 0.78 or so, it's a get the fuck in signal, right? And then whenever we hit the zero bound of this, it's a get the fuck out of Dodge signal. So you can see that right now we are basically at 0.38, so we're on the other side of like the average risk. Like we're trending towards the get the fuck out area. But this little pullback has given us a little bit of a candle up. So we're effectively in kind of like no man's land right now. It seems like we have a reasonable amount to go up still in crypto without this indicator kind of blowing up. But also, it's not like we are absolutely in just kind of clear blue skies territory.
I love this chart so much; it just like makes so much sense.
Yeah, and it looks like it's a pretty decent measured move down to the bottom. Like it's about 38% on the ratio. So that's like a, this may be some like awkward non-exact math, but that might mean you can support another 40% in asset prices from here. That's pretty good, right? That's like, that would take us to a little over 2K on Ethereum, right? That would like kind of hit that target perfectly. So this ratio basically goes down to the danger zone as crypto prices go up. And it goes down as stablecoin market cap goes down. So if more stablecoins flow into the system while price remains constant here, you would see this ratio tick back up to the kind of safe zone again. So I would like super highly recommend anybody listening to this who can't see it, pull up this YouTube and look at this indicator. It's not something I see people talk about a lot, and it's not necessarily like I made this myself. It's not like you can just kind of click on something. Maybe it's something we could make and just give to the people. Actually, that might be kind of cool as a trading view indicator. But this to me is such a good like guide for like where we are in like the froth cycle. I think, are we very frothy right now on a relative basis, or are we very like kind of oversold right now on a relative basis? And I will be using this going forward to get into and out of stuff. And I'm sure the market will realize it's a thing. It tends to find alpha and use it. And then maybe these swings kind of get less pronounced over time. We don't go all the way to the top and all the way to the bottom. But for now, it looks like a really good thing to have in your investing arsenal.
Definitely. And it reinforces my desire to sell 2,000 strike ETH calls. Like 2,100, 2,000 ETH calls, just hammer them again and again, let them expire, worthless, sell them again, collect the premiums. And if we get to the 2,000 or 2,100 level, then I want to get the fuck out anyways.
That's really interesting, actually. I hadn't considered that. So we could like redo this indicator too, just with ETH price, and it might be interesting because it would give you the kind of upper and lower bound of, like, as you said, like if a 38% move in this ratio corresponds to like a 2,100 ETH price, then you should just sell 2,100 ETH calls because that's where you want to get out of Dodge anyway, as you say. And as long as like stable coins aren't meaningfully changing in their market cap, then you kind of expect that ratio to hold again. So I really like that idea as an option selling strategy. And you could do the same thing with puts, right? Because if you tick back up here, well, that's going to be the price where you want to get back in anyway. You're happy to buy there. So maybe you want to sell puts in that range. So Yeah, cool.
Can I ask a clarifying question? Is
Yeah.
this specific chart only useful when the amount of stable coins is roughly flat? Because you could also see a large increase in the amount of stable coins and the ratio potentially stay somewhat stable, correct? Or no?
Well, the chart is still useful because if there's a large influx in stablecoins and price remains constant, this indicator will tick back up, and it might tick all the way back up to into the safe zone. And what it's telling you is there is like more liquidity in the crypto ecosystem to support higher prices. So it works in any sort of environment of stable market cap, be it up, down, or flat. Like it incorporates the stable market cap and the crypto prices into one thing here.
Yeah, I like this one because it kind of blends in well with our thesis about crypto being fundamentally like a high beta liquidity play. Like it is a liquidity sponge typically, and so this is a good way to kind of blend that fundamental thesis about crypto with maybe some indicators that can help guide when you're in and when you're out.
What I just realized too, to slightly change for like a quick second, is we were talking about the net liquidity indicator a little while back, and how like everybody was getting really bullish here on like February 1st. And February 1st is when this NewsAge net liquidity indicator that we've been using on TradingView, that flashed a sell signal, and it was
Sure enough, like clockwork, baby.
look at that, like right at the top again. So this is one of the main things that's kind of giving me pause and questioning, like maybe we actually either did megatop, or maybe like there's actually like a significant downside move left, because we actually have a ways to go on the liquidity indicator before we trade back into the green zone again. And a move like this in the net liquidity indicator, I think, could correspond to like a really nasty down wipe in like Ethereum and all crypto prices. Like the kind of down wipe, I think, that would have people saying, LOL, you morons, you bought the top, it's over. Because right now, everybody, I think, correct me if I'm wrong, you guys still feel pretty good about, maybe not Eric, but like you guys still feel pretty good about buying like a short-term dip here and loading up for higher, because I do. But this worries me. So another thing to keep an eye on out there. If you guys aren't familiar with what we're talking about, pop in the Discord and we can show you how to set this indicator up, because it is called a lot of tops and bottoms in the last couple of years. So another thing to have in your toolkit.
Okay.
These are great charts, Steven. Great
Yeah,
charts.
this is fun. All right. What do you think, boys? Should we wrap there?
Yeah, I think it's a good place to wrap, unless anybody has anything super compelling.
No, it's good.
Great.
All right, cool. Well, I hope everybody enjoyed the alpha then, and we'll see you back here, same time, same place next week.
I like that. Have a great Friday, great weekend, great Monday if you're listening to this on Monday. And yeah, this was great. We had a lot more people in here today as well. I'm noticing the numbers ticking up. And yeah, just thanks for being here. And definitely ask questions when you're here. We can always take those, and feedback as well. And one reminder as well is these videos are going to be on Spotify. So if you're used to listening to the pod, you can get the video as well on Spotify. Can't do that in Apple Podcasts yet, but it's pretty sweet that Spotify has that. Yeah, have a great day, everybody.
All right, amigos. Later.
Bye.
Peace.